Well, welcome back, everybody, to Markonomics 101 presents Hoot Loot, the place to come to be informed, be amused, but never be misled. You are misled by so many people. We're never going to do that to you here. Today, we're having an incredible show. It's called Markets Teetering Despite Federal Reserve Intervention. And basically, we're going to talk about the Federal Reserve again. They are stuck. The Federal Reserve is just absolutely stuck, and I'm going to go through that with you in a minute. That's why I'm sitting in front of the building. I'm waiting for somebody to commit suicide and jump out of it or something, because they're really stuck, and I'm going to tell you exactly how stuck they are. But we want to talk about a couple of promotions first. One is that we're working with Le Metropole Cafe and Bill Murphy, who was on a couple of weeks ago, and we're going to have a drawing in a couple of weeks for a lucky winner of Le Metropole. It is a wonderful, wonderful newsletter, and we're going to pick it up for you. There's also Gata.org. That's Bill's 501c3 is charitable organization, which basically just tries to reform free markets. I mean, it's there for information. It's free. If you donate to it, we'll match your donation and help you get a year's copy of Le Metropole. It is the best newsletter there is, especially if you're into precious metals, and you're going to be into precious metals pretty soon, or you're going to miss out on a big opportunity. We also want to talk a little bit today. I'm going to play Huckster today a little bit. I hope you don't mind. But we have some cool items. Look at this cool keychain that we have that we are going to be selling really soon. Look at that. Is that not gorgeous? That's a Hoot coin. Okay, we have not only Hoot coins, we have Hoot belt buckles right here. There's a Hoot belt buckle. We even have Hoot silly string, believe it or not. And we're going to spray some silly string at everybody that says nasty things to us. So there. All right. So in any event, we are going to be back in just a minute with some incredible information. And if you would like and subscribe, we'd really appreciate it. The people subscribing are growing in record numbers. I want to thank y'all for doing that. And we're not going to disappoint you. We're going to give you information that you are not going to get anywhere else. And we're going to talk about that coming right up with the charts. Well, welcome back. We're about to show you the charts here, but before we do that, I want to show you my Hoot Loot shirt. I mean, this is the fashion statement of all time. So let's go on to the charts here and let's talk about yesterday's news, Bitcoin. Remember that episode, that show we did called Bitcoin Bites Back, where we questioned its authenticity? Well, it turns out that a lot of people are starting to question its authenticity, as in Bitcoin actually went below 30,000 today. So maybe it might not go to that $1 million per coin number we keep hearing about. Maybe not. So Bitcoin, if it breaks, it actually broke below 30,000, that support. It just bounced back a little bit. But, you have no idea who's manipulating it, fooling around in it. But all I can tell you is this. It's taken an awful lot to move these markets right now, because they're heavy. They want to go down, and the Fed doesn't want them to go down. They're stuck, and I'm going to tell you about it in just a minute. This is Bitcoin Cash. Speaking of disasters, already down 70% from peak to trough, and it was in a matter of weeks. See, when companies... when companies start a decline like this, very often they go about 85% down to the target. This might go to zero. And the reason it might go to zero is because Bitcoin has no value. Neither does Bitcoin Cash. It's a password. So, seriously, check out Bitcoin Bites Back, and you will learn a lot of stuff that you did not know, and you wondered why nobody has learned that before. Dow Jones Industrial Average. Here we have a case again. This one kind of surprised me. It actually broke from an ascending wedge. We've talked about what an ascending wedge is. It's an upwardly sloping kind of a, looks like a wedge, the kind of thing you use for a doorstop or something. And it's actually broken down. This one might actually have topped. I'm not going to ring the bell and go ding ding again, because I already have a crow to eat for this chart coming up, the NASDAQ 100. I know. I rang the bell. I went ding ding. Okay, I will eat crow. I just can't find any right now. They are outlawed in this area. But I promise you there will be a crow eating episode in the very near future, maybe as early as next week. We're just trying to see what we can do about getting crows. if only I hadn't said that. Now I promised it. I have to deliver. That's the way we are here. Okay, but anyway, NASDAQ has made a slightly new high, which is also really weird when you consider everything else going on. It just doesn't make sense, but here it is, okay? Um, the S&P 500 also broke down slightly from an ascending wedge and popped right back into it. So it's getting a little bit of the Dow, a little bit of the NASDAQ. This thing is really close to breaking down, but not quite yet. If we look at the small cap index, it already does look like it's broken down. You can see that that red box there on the right that is actually broken down. It looks like it made a slight new high, and then that slight new high was kind of a fake out, and it's broken down too. The U.S. dollar. Now this one, I can't explain for the life of me. I don't get it. The U.S. dollar is going up like nobody's business. Now, when you're sitting there and you're talking about $2 trillion stimulus plan after stimulus plan after stimulus plan, I don't know how this thing goes up. The only way it goes up is because the other currencies must be worse. But in any event, the US dollar is going up, totally counterintuitive. It just can't last. This thing, the US dollar is going to be, you're going to wipe your butt with it pretty soon. And that's, I'm telling you, down the road, they have so debased it, the Federal Reserve, in the order to hide the truth from you. And hiding the truth from you is more important than ever, because especially they need interest rates to stay down, because if interest rates go up, our budget deficit goes like 3 times as high, because most of it is short term. Not only that, the budget deficit is we owe ourselves money. Okay? In other words, we're the ones that are lending to ourselves. So what good does that do? We really don't own anything. So it's going to be very interesting. But right now the dollar's going up. I don't think it's going to go up much higher, but you can never say never, especially in a weird market like this. Commodities, they're still going up. Here's the CRB index of commodities, and that continues to go higher. That is a great, great, great indicator of inflation to come, and it hasn't even fully factored in yet. When prices of inputs go up, they sort of enter a production chain, and what happens is that, like, the price of oil goes up, and then it goes into a production chain, and then the intermediate good goes up, and then that goes up, and it sort of filters its way through. So it's never an immediate effect that you're going to have, and that's why the whole notion of transitory inflation, I love that. Transitory inflation, J. Powell, means that it's going to go away. If you put your head in the sand like this, like an ostrich, it's going to go away. So in any event, the Dow Jones REIT index, another sign of inflation here. This is not a housing bubble, folks. This is inflation. Rents are going up, occupancy rates are going down, and all of a sudden now, with the relaxation of a lot of the rules in various places, of course, not here, but various places, real estate is looking really good, especially in the low interest rate environment. You're getting a very good cash flow. Rents are going up, and inflation is pushing your rents up, but your financing costs are being held down by the good old Fed. Lumber. Now, this is one that's very interesting. I've shown this before. This one may have actually hit a bubble. Now, why would I say this has hit a bubble as opposed to it being a sign of inflation? The reason I say that is that lumber has come way down. It's already fallen 50% from its peak. Usually that's too much to continue an ongoing trend. It may be in a counter trend of some kind, but 50% drop, here's what it tells me. It tells me that a couple of builders, some builders out there, were desperate for the last few planks of plywood they could get, and so they paid through the nose to get it, to not have the house be unoccupied or not finished or whatever. And that's probably what happened, and that has since eased itself a little bit, because people aren't building houses anymore, because guess what? They can't afford them. Oh gosh, crude oil. Well, here's another one. Crude oil goes through everything. Crude oil is now over $70 a barrel. It keeps going up, and this is the biggest component of commodity prices. It's an input into everything. It's an input into just about every single thing there is, and it's even an input into this beautiful belt buckle that we have for Hoot Loot. and it's even an input in this this keychain that you can use to if you're into you know you know what it's called. I don't need to say it, but I just happen to know people that are into it. Not me, of course. Some people. Okay, so let's keep going here. Unleaded gasoline, it keeps going up. And what's funny is that this was the price of gasoline. The price of gasoline was below $2 a barrel. I'm sorry, $2 a gallon in most states for a long time. This is non-California formula, which means that in California, it actually costs more because they have to put all kinds of other chemicals in it. And plus they tax the hell out of it. And that's a major difference. You tax the hell out of it, and this thing continues to go up, and people, it costs more to drive, and that's all there is to it. And for some reason, traffic is back. I don't know why, but it's back. The agriculture fund. This is again food prices, and as I've mentioned in the past, food prices are going up really fast. I mean, that Big Mac I had last night was like was almost $10. I'm kind of kidding here, but it's like it's just going to be a matter of time before food prices. There are spot shortages everywhere. Okay, it's one thing one day, one thing another day. But when I order food from the store to be delivered or whatever, they're always out of something, and there's always something that's a shortage. Meat, big time, and there are also an awful lot of companies that are requiring masks and requiring people be vaccinated to go back to work, or there's some other regulation that they have to deal with, and so production isn't there, and that's the problem. That's how inflation starts. You throw too many dollars out there, but there's nothing to buy with it, and that's the problem. We have nothing to buy with it because we're not making anything. And this is the base metals fund. Now this one is held up pretty well. These are again basic building materials like tin and lead and stuff like that. Nickel. I don't even know what a nickel goes for in terms of nickel. I had to look that up next time. But again, these are still showing that they're still charging higher, and this is a major sign of inflation, the word that Jay Powell hates. Okay, palladium, look at that. Got nailed. This is a metal that got nailed the other day, and I'm just going to say right out that I have a feeling that there was some intervention by the Fed to get all the metals down, because they just took gold way down too. Um, Platinum, same thing. But I still tell you this: when you have unlimited dollars chasing limited resources like platinum or palladium, you are going to have those go up in price, even if they have a little shock on the way up. You have the sharpest retractions in a bull market. You have the sharpest rallies in a bear market. That's just the truth. The biggest up days occur in bear markets. The biggest down days occur in bull markets. So that's what keeps you from riding the horse the whole way. You get bucked off of it. And it's hard not to, because we're emotional people. We get scared. We see a profit. We hear people, saying things, and we listen to them, and we start losing confidence in our own ability to see what's going on. That's what I like about charts so much. Charts are completely objective, except they do require some interpretation, but you can get an awful lot of information out of them. And we're going to have very shortly the College of Charting Knowledge up on our new website. We're going to teach you from A to Z how to do charts, and I'm telling you, it's going to be the best course you ever took, and we'll even give you a master of charts when you complete the course, and then maybe a bachelor of charts. So that's on with that. Now gold. Now here's the dilemma right here. Gold should be going up. How on earth did this thing get clobbered so badly? I mean, right at the 50% retracement line, gold has not only gone down. Maybe this time it's because of the dollar, but gold and silver ought to be just screaming. They ought to be just going through the roof. Because when you think about it, every other metal has gone up already 800%. Even if they come back a little bit, oil's gone up 800%. Why is it that this metal does not go up? I'll bet I have an answer for you in a minute. All right, silver, same thing. They knocked the hell out of it. The Federal Reserve has got a problem, and I'm going to talk about this with interest rates here. Here's 3-month Treasury bills, and here's where we start talking about it. Notice the 3-month Treasury bill went negative a couple months ago. Actually negative, like a fraction of a basis point or something. But look at it now. It's trading at 28 basis points. That's higher than the Fed funds rate of 0 to 25. You know what that says to me? You're going to raise interest rates, Jay Powell, whether you like it or not. The market's going to do it for you because it knows what's going on, and it doesn't believe the crap that you that you're spewing out. Oh yeah, it's transitory, it's transitory. Well, the problem, Jay, you have is not one that you made by yourself, but it's one, unfortunately, that's been decades in the making. This economy has been so mismanaged, and now you have no choice. You can't raise rates because the budget deficit is so high. You can't lower rates because you're going to spur on more inflation. So what do? You basically say everything's okay. And as long as people believe you, you're good. But pretty soon they're not going to, because they're going to want raises. They're not going to be able to afford things. Their rents are going to go up. And I know already there's already a number of unions that have already started negotiations, even at restaurants paying minimum wage. You know, a lot of people don't even want to go to work because of the unemployment benefits. You know, they get paid not to work. And we talked about that one too. A little economics here wouldn't hurt anybody in politics, now would it? But interestingly enough, this will force the Fed's hand, and that's why I showed it this time. The 5-year, look at that. It's going up. So what we're seeing here is the 5-year is going up. The shorter stuff is going higher. The longer stuff, like the 10-year, is kind of not doing too well. And the 30-year is not doing too well. Now, here's what that means, okay? A yield curve is basically a measure of the yield versus the time to maturity. The normal yield curve slopes positively, meaning that T-bills yield less than 30-year bonds, okay? When the yield curve steepens, in other words, when that differential becomes greater, 30-year bond starts to spread, it's good for banks because they borrow at the low rate, the short rate, and they lend at the long rate. It's also good for assets and politicians and all that kind of stuff. But the problem you have here is you're not going to be able to keep these down forever. And, you know, the Fed right now is basically buying $120 billion a month in Treasury bonds. They're the buyers of this stuff. You're not buying it. I'm not buying it. Who would take 2% when you have 8% inflation? The federal government, because they make such good decisions. Aren't you happy that they're shepherding your money and they're investing your Social Security trust fund at 2%? No, 2% or less. And yet you have 8% inflation. I just gotta love that one. These are tips. Treasury inflation protected securities. Now, these also dip down but come right back. So that starts to tell me that these weren't important enough for the Fed to bomb, you know, and go in there and intervene. And all the central banks that are doing it right now, they're all desperate. You know, they're all in the same situation. They're desperate. They're trying to come up with another COVID too, I'm sure. So we'll see. Amazon, this one almost looks like it's going to break out. I didn't think it would, but this is an Amazon 5-year chart. And look at that. It's all the way back up to its resistance. It could break out as early as tomorrow. And if it does, then my crow eating is going to happen regardless. I'm going to eat it, but I'm telling you, a lot of these NASDAQ stocks are starting to look pretty good. Now, Facebook also looks pretty good. And I want to just mention that Facebook is the owner of WhatsApp. WhatsApp is basically the breeding ground for scammers, Mark Zuckerberg. And you have been complicit in this. I'm going to show everybody pretty soon how you did it. And believe me, I got the trail of evidence. Come get me. You're a coward. You only want to go after trafficking little kids. You're a coward. And that's all there is to it, Zuckerberg. Okay, Google. Here's another one. Acting very healthy in an uptrend. So I give this one a plus. This is going to continue to pull the NASDAQ up higher for reasons I'm not quite sure of. Microsoft too. Again, continues to do really well. But now Microsoft has got that whole Bill Gates problem and, you know, all sorts of investigations. So who knows what's going to happen here. But this thing has been in an ascending wedge for a year and a half. It will take 10 years of going nowhere for this thing to finally have another burst up. So if you bought it here, you may get a little more money out of it, but you're not going to make money for a long time because this thing, you know, it's trading at a high PE. And, you know, there is some movement in Congress right now to start, you know, busting up these monopolies because they're getting to be awfully powerful and they're putting small business out of work and they're putting people like you out of work, forcing you to have to take their handouts and be one of their dependents, which is exactly what they want. NVIDIA, here's a company that is a chip maker for cryptos and gamers. It is the fastest chip there is. And look at this thing, now worth $500 billion. This is a poster child for, again, this again tells me that there's still some room left in the market to go higher. Well, actually, a lot of room. We'll see. Now, the bank index, here we have exactly what we would have expected given rates coming down and given the yield curve flattening. A bank generally borrows short at the short end from the Fed at a low rate and lends at a higher rate to a company or whatever and gets a higher return. And when the yield curve flattens like it's been doing, they don't have that anymore. They don't have that going for them. Not to mention the fact they're overvalued, but that's a whole nother story. But anyway, this thing is starting to come down. It's right at support. We're going to watch this very carefully because banks are important, and they're important. They'll get bailed out no matter what, I'm sure. Here's a broker-dealer index. Believe it or not, this thing's broken down. Now, that's kind of funny to me because I thought this thing was going to go up forever. But I guess at some point people are going to run out of money, and I honestly think what is actually hurting them, or is going to hurt them, is their association with Bitcoin. Bitcoin is going to be something people are going to want to run from. They're not going to brag about, oh, I own Bitcoin, I was so smart. They're never going to tell anybody they own Bitcoin because it's going to be a sign of stupidity. Trust me on that, because it's worth nothing. It does nothing. Okay? It was built in the USA. Looking at what else can I say? JP Morgan also not looking so hot, and following the bank index down. Goldman Sachs, look at that. Even Goldman Sachs is broken down. What is this world coming to? I mean, Goldman Sachs, they used to call it government Sachs because all the Fed, the treasurers, Secretary of Treasurers would come from Goldman Sachs or go back to the government, back and forth and back and forth. So of course they always get good treatment. They always get bailed out. They don't have anything to worry about. The Airline Index is surprisingly strong that it's this high. I think there's maybe a little bit of pent-up demand to fly, but it's never going to return to where it was before. Working out of home, Zoom, and things like that are going to change lifestyles permanently. And I just don't see people. I personally do not want a colonoscopy, at the airport and to have to wear a stupid mask and get into fights with stewardesses and all that kind of stuff. All the stuff I read about. So I personally don't want that. I think airlines are actually in some trouble. They're not going to have those kind of miles anymore. And here's probably the best airline there is, or one of the best, is Alaska. It's in a rounded top. So that one is on its way down. FedEx, this company has gone basically, this delivers logistics, and it is very profitable right now. That's why it burst up. And it's sort of turned around. I kind of call it neutral, but it's an important company because it takes things from point A to point B. And without it, and it has higher profits with logistics now than it ever has. But if the economy slows, which it might, we don't know, things look like it will, things look like it won't, you just don't know. And the same thing goes with what I call PS, even though it's UPS. The U just kind of went off to the left there. But this one also just burst up from the stimulus that I never got. God, I thought I'd get through one show without going stimulus, but I didn't. Oh, sorry about that. Stimulus check. Stimulus check. Okay, we're all good. So let's keep going here. Caterpillar Tractor, this is an infrastructure company. Again, this one broke down the other day, and this is not a good sign because they're going to be a recipient of a lot of the new stimulus bill, and they're going to be a recipient of that and build and construct and all that. Well, this thing now is broken down. That's not a good sign. And Dow Holdings, same with it. It's still above its trend line. It's still somewhat healthy. It could be just a correction, but things are coming down. There is some sign that things are, that the economy has kind of just burst up, kind of flattened itself and is coming back down. That's what it looks like, but none of it makes sense, really, when you put it all together. CVS Health, and here's another one, just all of a sudden burst up. They had much higher margins for a while, and when products were in short supply, you can get them at CVS. It's a great retailer. Look at that, just burst up, and all of a sudden now it's weakening again. And again, that starts making me wonder whether the economy is going to do like almost a 180, just an up and a little flitting around and down again. Nordstrom. Okay, so Nordstrom is not a company you're going to take your stimulus check to, and they don't have nearly as nice stuff as a Hoot Loot shirt. I mean, come on. I mean, come on. But they've actually broken down. Okay, so luxury, more of a luxury retailer now, is actually breaking down, not bursting up. It's the cheap stuff that's going up, and we'll show you that in a second too. Home Depot, look at that. This thing went crazy, and all of a sudden it's coming back down. Maybe they held on to that lumber too long that they had in inventory, because those inventory profits that I speculated they might have are gone. You know, lumber valued at $1,600, per board is going to show you a hell of a big profit. So these guys are coming down too. Walmart also coming down. So retail has some things going up, some things coming down. It's just really, really hard to understand what the hell's going on here. And with our good friends at the Fed, they're stuck. They cannot raise rates, because if they raise rates, the budget deficit goes through the roof. If they lower rates, they know they're going to have inflation, so they're going to keep them down as low as possible. But that too will be a mistake, and the market will force them to raise rates. It will force them. They'll have no choice. Visa, look at that. Looks pretty good to me. That's a credit card company, and that indicates some strength in the economy. And so that's what I'm saying. The economy is teetering both ways. It's very hard to look at the weight of the evidence and come up with a conclusion, except there is a conclusion that we still think that inflation is here to stay and that this is just a fake out. But we'll see. And I want to show you this last. Believe it or not, this barcode got produced, and this is how people are being stolen from. With this barcode, it's a WhatsApp barcode. If you use your camera on a QR code, just your regular camera, it'll go to a website, but nothing will happen to it. If you use the WhatsApp camera, which is what they want you to use, you end up being vulnerable to having your assets taken, because the person I might be talking to on WhatsApp has this already. I am shown as Markonomics 101, which means they got my barcode, they got my QR code from my Facebook page. And what's interesting, it's gone, and on other Facebook pages, it's there. Same thing, edit, and we'll talk about that more later, but I'll tell you this is going to be the story of the year, and this and Bitcoin and all of that, and China, it's all funding the most evil activities you can ever imagine. And we're just gonna bring it to light and shine the light on it and let the roaches scatter where they may. Anyway, I hope it didn't depress you too much. The market is on the teeter-totter here, and I just wanted to just tell it like it is. And I hope you enjoyed today's episode. We always appreciate comments, subscriptions, whatever. And if you want one of these, they're going to be available for you. So we're going to go into this WhatsApp thing pretty soon, and then we're going to tell you why Mark Zuckerberg may end up going to the Hague. With that, please like and subscribe. Thanks a lot for being here. We'll see you next time on Hoot Loot!